bring on board Rahul Chadha, head of Asia Pacific Investment Division with Mirae. Rahul, what spooked the markets yesterday?
I think if you ask me, budget was lined with expectation. Three key expectations which we had before the budget. Some clarity on fiscal deficit, which was pretty much as expected. 5.23 for this year, 4.8 for next year. Some roadmap towards GST. I mean, the finance minister talked about that. Something to channelize savings into more constructive financials, which was done. Incentives for accelerated capital expenditure, which was also done. I think the reaction of market was to the bigger issues which have been looming for large and people have been ignoring. And these issues were something of core price pooling. We first heard of that about a year back. We've not seen any details on that. And I think the bigger worry for market is the trade balance. I mean, the January number was nearly a $20 billion number. So that's really worrying the market. So we need to find some bit of an answer for these issues. Else, I think the macro can overwhelm the near-term momentum in the economy.
Do you think the clarification on the Mauritius route, which came after the market had closed from the finance minister, is good enough, or markets are still eager to understand the big picture? Because I'm getting a slightly confused opinion on that issue.
I think the clarification is good enough for genuine FIs who have a diversified base of investors. Where these issues again come up is that what is the real intent? That is like from some corporates which may root through it. That's the key issue. But I think the finance minister has been on record and he's met investors all over the world saying that they will welcome and encourage genuine investments in the country. So I don't think it's a serious issue. Again, I clearly believe from a market perspective, there were issues weighing on the mind of market. We've seen third quarter GDP number which has come at a 4%. There are issues which is whether a current account deficit would limit central bank's ability to cut rates. The governor has been on record in various forums saying that it would. So in a period when growth is slowing down, in a period where you need to keep your fiscal deficit under check, in a period where central bank cannot cut rates and valuations are looking fairly reasonable, I think market can take a breather, and as the government does the right things, we look forward to next period of growth.
So Rakesh, I don't want to get this one wrong. What you are mentioning is rather important. What you are mentioning is that the Mauritius tax issue is not a big problem and markets are likely to just ignore that point going forward. Rahul, are you a buyer in this market? Are you buying into this fall? Valuations are looking attractive. Last time when we interacted with you, you liked India, but you were not very happy with the valuations.
Yeah, see, I think what we've been doing from Jan onwards is taking money in sectors which have done well, which were financial, some of the high beta cyclical names. Outside that, the portfolio is still exporter heavy. We clearly believe that the bias is for a rupee depreciation in the time. In a period when growth is slowing down, I think the domestic economy would underperform. And as we see government doing all the necessary steps to revive the growth, and hopefully with the slowing growth in 3-6 months, the current account would also fall into place. We'll again see a shift towards the domestic sectors. But in the interim, I think the exporters or the defensive sectors would do better than financials and the other cyclical sectors.
Rahul, you made a point that in the short term, you're leaning towards exporters. So when you say exporters, can I safely assume that you're long on IT?
Yeah, I think IT would be there, pharmaceutical names would be there. So these names would tend to do well. Because I think currency may remain under pressure for next couple of months. And then by probably June to September, we'll see impact of slowing growth coming in the trade balance. Unfortunately, what has happened is despite nearly a 20% rupee depreciation over last 18 months, we've not really seen elasticity play out in the trade balance. Imports are still rigid. Exports have not grown that much. So I think once trade balance becomes much better, and then in the interim, government keeps on doing this hard work towards taking care of coal pricing, kick-starting growth, which is much needed for our country through higher investments, all the incentives given in the budget. Again, we are laying the seeds for a secular bull markets in the country. So clearly, from a medium-term perspective, I'm positive. If you look across the region, people are looking for secular stories. India is one of those secular stories. Capital is available in plenty for governments who are doing right. Valuations remain attractive. If you see in ASEAN, most markets are 2 standard deviations above mean. India is below the historical means. So from the 3-5 year, I'm extremely positive on India. But in near term, we need to do lot of hard work to undo the paralysis which was there over the last 3 years, basically.
At the current juncture, give me an idea of your portfolio. Are you sitting on the sidelines? Are you maintaining strong cash levels, or you are a big buyer in this fall?
No, I think we've fully invested in the market. Our whole idea is that a lot of people have not digested this slow growth. When you talk to people, there's a bit of a casual attitude, there's a bit of a bullishness around, and I'm not sure as we go through these testing periods, which is next 1 or 2 quarters where growth is slower, how would market react to it? So clearly our reason for being cautious in January was that FI14 was fully discounted as early as January 13, and valuations didn't give you comfort. As valuations get corrected and become more comforting, we would look to add in the market, provided we see right kind of steps from governments towards filling the missing gaps for the secular economic growth. So I'm constructive on markets, but we have our own parameters for that.
Rahul, good chatting with you. Wish we had more time, but we'll let you go on that note.